following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and that music means it's time once again for the Option Block, your bi-weekly source of options, wit, and wisdom, and occasionally, and I use that word very, very strongly, occasionally, hilarity. My name is Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And joining me on this holiday week all-star panel are two returning regulars, starting off with the man from Maine himself, a.k.a. the Lobster, one Andrew Giovinazzi of Option Pit fame. Andrew, welcome back to the show, sir.
Thank you. I'm thrilled to be back.
You sound thrilled. You sound as if you're just engrossed with a deluge of lobsters yet again, sir, coming over your front porch.
I did. You know what's funny is I got slapped with my own saying today in the pit report. We had our morning pit report, and some guy told me that I got to get with it on my trades and do stuff. I wasn't scalping we have like a couple educational trades we put on. My own subs nailed me for not being aggressive enough scalping.
The pupil becomes the master. I love it.
That was awesome. I go, well, what can a teacher do when that starts to happen?
Now, were they quoting you, or was it just a fortuitous, well-timed comment?
No, they were. They put the doing stuff in quotes.
Oh.
they just took the needle and they just plunged the knife deep into my option guts. But
See?
They were correct.
The word is getting out there, sir. Your fame precedes you everywhere you go.
Yeah. Never happened to me before. I was a little freaked out.
Welcome to the club, sir. It's a fun club to be in. And speaking of the Fame and Fortune Club, we are also joined on the show today by one Mr. John Grigas, holding down the Options Express hot seat. Mr. Grigas, I'm surprised you could take a break from the gauntlet of paparazzi to come join us today.
Yeah, you're talking about the club I got kicked out of because I didn't meet the minimum requirements. So, no, definitely not in the Fame and Fortune Club. Not yet, at least, as they say. But short week this week here, so a little bit slow Monday for here at Options Express. It looks like industry-wide, according to the notes I'm looking at as well.
Yeah, it looks like a lot of the industry has taken the week off for the most part. It's a weird one. You have a holiday in the middle of the week. Not exactly ideal for your vacation planning needs. But c'est la vie. We had a fun weekend over here. I actually took the little guy over to see the new Pixar movie Brave. It was interesting. He's about 3.5, so probably a little bit too young for it, but he was still very, he wanted to see it, so we relented and took him. And it was good for the most part. It wasn't, I don't think it has that in our quick movie review intro segment here. It wasn't exactly up to, I think, the recent Pixar movies, but it was interesting. If you have a little guy, be warned, towards the end there are some scary moments that you may want to take a potty break at those moments. But other than that, an interesting Pixar film. Your kids are a little older, John, so they might like it.
Yeah, no, I'd probably get out there, especially with this heat.
Movie?
What was that?
Pardon me, Andrew?
Sorry to interrupt. What was the Pixar movie?
Oh, Brave.
Oh, okay. How old's your little guy?
3.5. So yeah, he's
dude.
He's younger than the target market.
The kid.
Yeah, they lose focus real quick.
As long as the popcorn lasts, he stays pretty focused. And they've been to Disney's credit, and I guess our consternation, they've been promoting it very heavily on Disney Channel and things like that. So he has been well aware of it for many months now. So the opportunity to avoid it was essentially non-existent. we were going. The Disney marketing machine got us. And I
think those movies have really gone downhill since Steve Jobs sold it to Disney.
They have speaking of Steve Jobs and Apple, they have a big dedication to him in the credits, which is kind of weird, dedicating a children's film to a guy who was such a horrible person and really denounced his own child. And he made some cool gizmos, but as a human being, just an atrocious human being. And dedicating a kid's film to him like that is kind of interesting. I know the Pixar guys have very strong feelings for him because he sheltered them from a lot of the Hollywood storm, but still, interesting dedication for a movie aimed at the younger demographic.
Yeah, he really doesn't embody the children's spirit.
No, if you think of companies that are the polar opposite of Steve Jobs in many ways, Pixar is one of them, which is kind of weird that it fostered and grew under his I guess you can call it supervision, which is kind of odd that he would allow such a thing to thrive when it is so contrary to the person he was. But I think
he was the CEO there for quite a long time. But I think a lot they said too was that it was like it was a break from like the business of Apple. And it kind of just was kind of freeing for him to kind of concentrate on that. And I think. I don't know. I think it did well when he was running it.
Yeah, it's interesting not to turn this into the Steve Jobs block, but it is interesting that he took it over kind of as a hardware play from Lucas, thinking he would use it to sell some of these high-end machines that were doing the graphics, and then he didn't see it as a content play at all. I think until the Pixar guys started producing some shorts as a way to sell the machines, and the shorts started getting some pretty decent recognition. One of them, I believe, got nominated for or won an Oscar, and that's kind of where they started realizing, hey, the actual business is in the content, not in these machines, and not in the hardware, but not even in the software, but in the stuff generated from that, and that's kind of where it seems like the true legacy of true legacy of Pixar began. Interesting stuff. All right, and with our trip down the Pixar memory lane, we're going to dive right into the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we talk about what was trading, and it was another interesting one on the old street today with a lot of mixed action. Some names getting beaten down pretty decently, others rallying. The major indices all relatively mixed across the board as well. We had the S&P closing up about 0.3% to 1365. We have the Dow closing down roughly unched to 12,871. We have the Nasdaq closing up as well, about half a percent to 2951, and the good old VIX cash dwindling ever downward, down about 1/4 point to 1680 today. Perhaps we'll start there, Monsieur Andrew, with the VIX action. This is a interesting that we talked last week about people perhaps selling out the weekend a little bit early and perhaps being a little bit aggressive with their intentions to divest of some premium going into the weekend. This would apparently, to correlate with that, the weekend continuing to come out, the holiday continuing to come out, we didn't see, even though there was a sell-off for part of the day today, we didn't see much of the VIX really getting any of the weekend back at all or anything along those lines. We really just see like the inexorable crawl towards the holiday. Is that what you saw pretty much today as well?
Yeah, I mean, we did rally right after that number. I closed the last of my volatility positions in the morning. Just basically, 5 minutes before the announcement, essentially, that ISM purchasing thing, just because we had ridden it long enough. But yeah, and then it just spent the rest of the day declining. I had the VIX futures down, at least $1 here at the end of the day. And the market had a very funny feel like we might want to go higher in the future. What's weird is it's kind of be decoupling from oil a little bit. Okay, oil can go down and the market can go up and everything's still okay. So, yeah, I don't see why we can't get down to a VIX of 15, 16, 15 and a half, something like that, which is going to be low because we've actually had some pretty perky realized volatility. So I think at some point it actually is going to be a buy if they just keep crushing it like this. I mean, that's my own, you know me, I'm the degenerate premium buyer anyway. So
never saw some juice you didn't like to buy, sir.
Funny though, we had, but Apple volatility did rise today in the face of the crush, which I found very interesting. So
yeah, Apple gapping up and the market essentially, giving up vol everywhere. Apple gapping up and picking up some vol. It's kind of that this is pre-earnings at this point, the pre-earnings run.
Right.
We're still a ways out here, but it looks like they're starting to follow that similar trajectory. Of course, the vol getting a bit of a pump too. It's an upside surprise, or not surprise, but upside pop. So you might expect, a little bit of some vol to come in, just given the aggressiveness of that move. I mean, Apple up 1.5% today, or 8.5 handles to 592.5, flirting with the 600 level again after having spent most of the past few weeks trading on the 5.5 range for the most part. So,
is there any data that's going to cross $600 again before earnings? I mean, you got to be realistic.
Yeah, it would not surprise me at all.
Earnings on July 24th, so I mean, we're pretty close.
It loves it. It loves going to the big number. So I have no doubt it will probably do that again.
So it's all that the 3-week ramp up to earnings has begun, is what you're saying, huh?
Pretty much.
I was hoping we could cut that window down a little bit, maybe a week and a half, 2 weeks, but nope. The Apple Love Fest has begun, aka earnings.
So anyway,
it is coming in. There's interesting volatility a little of everywhere, and I think they're marking. What it feels like is they're marking the volatility down a lot because of the holiday, and all this front month stuff is getting just super cheap. I mean, I know it's only a few days, but with all the illiquidity, it wouldn't take this market very much, and I think the surprise will end up being on the upside if we get any kind of an explosion, because all this front month fall is getting marked down so much. It's almost like they're kind of overdoing it, but that's what I feel like anyway.
Overdoing a vol sale, going into a holiday, going into the long summer doldrums. How could you possibly insinuate that, sir? I'm offended by your suggestion.
Because last summer, nothing happened.
Yeah, I know. How many times do we need to have that? These things play out before us where
all those guys on Friday, man, I just wish I would have got that last sale off. And then by Monday, they're like, oh my gosh.
Yeah, it's one of the most basic things we try to teach retail options customers is, don't do that. Don't chase the weekend into late Friday and then end up selling on Monday or perhaps even Tuesday's vol levels if you're getting really, really aggressive. It's just there's no reason to give away a weekend's worth of risk for no reason. And yet we're seeing the quote-unquote pros doing that exact same thing right now. So it is a bit of a head-scratcher.
They're reaching, I don't know, it just feels like they're reaching to sell it. And could the market be up 1.5% for no particular reason? Sure. We're going to be down 1.5% for no particular reason. I mean, I don't know, I see premium like that being sold everywhere. So it's just, that will be my little trading block edition. We'll see what happens.
Of course, speaking of vol pops and crushings, there were a couple names that got hammered pretty well. We talked about RIM earnings after the bell on our last show, and it looked at the time like it was essentially unched. It looked like that straddle sale was a fantastic sale. I believe the weekly straddle was trading about 90-odd cents going into earnings, and it looked like it was essentially unched down a nickel. And, of course, given the news that came out, that straddle sale didn't look too good in retrospect because it opened up down about $1.50 or so and is trading about so RIM closing today at 7.49, hovering around 7.5. Not exactly good times for RIM. Our friends up to the Great White North must really be wiping a tear from their eye given these announcements. But yeah, RIM, one of the few names getting a bit of a vol pop today. Ford also taking it on the chin recently as well, trading well south of the of the 10 handle, which has been a support level at Ford for a long time.
Wow.
Trading 930, closing at 939 today. I haven't had a chance to dig into it. I don't see any appreciable news that's unique to Ford that would be driving it down. I think maybe perhaps
All Europe.
The Europe news, of course, that would hurt them as well, crushing some sales outlooks out there, as well as I would imagine the healthcare can't exactly be a boon for them. I know Ford's had a lot of issues with those affiliated service costs of personnel in the past, and I'm sure anything that ramps up healthcare expenditures can't exactly be a boon for Ford. So perhaps a combination of those two is what's weighing down on it. I know
healthcare's free, I thought.
Yeah.
Isn't it free now?
It's just a tax. But yeah, I know. Too bad Uncle Mike isn't here. I know he's the big Ford holder among us. But an interesting one. Yeah, I trade in out of Ford quite a bit, and there's a lot of opportunities now that it's hovering south of that 10 handle, and Vol's getting a bit up now. Interesting times here in good old Ford. Of course, speaking of interesting times, it is around the first of the month, and for options land, that means the big numbers are out, the volume numbers, the market share numbers, and all that fun stuff. And it was, as expected, a pretty lackluster June from an options perspective. Overall volume across the board in June was down about 13% from last year. We also saw the average daily volume across the board dropping about 8.5%. If you look just at equity options, that's about the same, with equity option volume down about 13% and overall equity options ADV down about 9%. Does that jive with what you guys saw over in OX land as well, John?
Yeah, we're seeing the same amount of reduction in volume month over month, year over year. You know, it's a trend we usually see, or at least a slowdown in late summer, kind of happening earlier. So maybe we're just kind of moving it up a few months. But sans last Friday, we're been pretty quiet, trying to figure out what's going on. It doesn't seem like the customers are very engaged in the markets right now. You know, they're, like I said, volatility was 16.5 today, going into a long week with a holiday right in the middle of it. There's just really no energy and engagement in the markets. So we're hoping to turn it around and hopefully get some good news out of Europe and solidify that the markets are a safe place to trade. But yeah, it's kind of it's slow. We're hoping we see this change here in the coming weeks.
Because it is the first half of the year too. Behind us, we also got some additional numbers out of OCC where they showed that overall cleared contract volume for the first half of the year is down 12% as well. So that's probably a little bit more of an alarming statistic than just the month of June numbers, where overall compared to last year, the industry is down about 12%. That's, of course, for the first half of last year, which wasn't even the period of great VIX explosion or the period of the downgrade and all the other things that really drove a lot of volume for the second half of the year. So overall, interesting stuff. Another interesting stat coming out of the numbers is that our old friends, the dividend trades, the div trades, made about almost 4%, about 3.8% of industry volume in last month in June. And I guess that number's about in line with what you would expect. I might have thought it actually would be a little bit higher. I guess anything south of 5% these days is a victory across the board. Not surprisingly, the bulk of those div trades went up on the Philly, with the vast majority of them going up on the Philly. And overall, PhilX's options volume, about 15% of it came from div trades. So you can see why that exchange continues to pursue that tactic. It's a great source of market share numbers and PR for them, if nothing else. But yeah, you have one exchange essentially putting up the lion's share of all the div trades in the business. Of course, ARCA coming on strong this past month too. Apparently they're deciding that they want to get a foothold in that race to zero, no profit fee cap business of the div trades, because they did about 7% of it last month as well. So interesting stuff as well. Speaking of the exchanges and all that good stuff with the volume, speaking of the exchanges, we were treated to a few interesting announcements over the past couple of days on the exchange landscape for options as well. On Friday, NASDAQ officially launched their latest exchange, the third exchange in their exchange family, the OMXBX options. Say that 5 times fast. That's a brand name that's sure to resonate with the kids. AKA calling it Box-like because they essentially just replicated the Boston Options Exchange, who they used to oversee and be the SRO for, and now they've kind of just replicated it on their platform. According to them, it's going to be a home for retail order flow that is transparent, and it will complement PHLX and their NASDAQ options market, giving our customers a complete liquidity destination for options trading. Obviously, John, you guys are heavy in the retail space. Any interest in this at all? Is this just another? This seems to me like another.
Oh, huge. Yeah, I mean, we were just like, finally, we have a place for our retail clients to get best execution at.
Listeners, you can't tell the sarcasm dripping from his words.
Yeah, slight sarcasm. I've been working on my acting this week, and I think that went over
very good. Very droll, sir. Very straight.
No, I mean, everyone's gotten the tone for what we think on this podcast about more exchanges, and I always love to hear the press release, and I'm glad you put it in the notes too. But I had read it earlier, that they kind of use the script and they just pass it around and initial it and date it and get it over to the next exchange and kind of rehash it. But it does make it harder for us and our tech guys to kind of include these routes in our execution desk, and really the upside is limited overall.
Yeah, with spreads already being such a difficult beast to master for you guys, the brokers, to execute, and for the customers to wrap their heads around how they actually are executed, adding yet another exchange into the mix doesn't help. And of course, on that note, there is yet another exchange poised to enter the fray. This morning, actually, right before we started recording the show, the ISE announced that they have filed for a second exchange license with the SEC, and they plan to launch a second options exchange platform by the end of 2012. They say having a second exchange will enhance their flexibility to meet the evolving needs of their members in a highly competitive environment. I think that's a no-brainer at this point, given the that sentiment, at least, not the exchange itself, given what's been happening over at ISE with their continually eroding market share and all the other issues with the failed merger and that exchange kind of being adrift of late. But, it has been off-quoted and I think misquoted from the guys over at ISE, including Gary Katz, their CEO. I asked him about this directly down at OIC back in May. I said, you're talking about launching a floor. The rumor is that they were going to launch a new trading floor. I said, why on earth would you do that? And they implied that this new second exchange is not going to be a trading floor. They're really just not a physical trading floor like a CBOE or a Philly type of floor. Really, it's going to be a electronic exchange. They just, in response to a question, said, by the way, we would never rule out anything, including an exchange floor. That's kind of where that rumor got started. So, contrary to the rumors, this is not going to be a new mini CBOE in New York or something like that, where they could trade options via open outcry. But nonetheless, interesting stuff. Perhaps last but not least, to wrap up this trading block / news block, we saw a lawsuit coming out today. Speaking of floor traders, is a whole gang of grain guys going after the CME. 24 grain pit traders who filed a federal lawsuit today against the CME to keep them from essentially settling their grain futures. Electronically, or incorporating the electronic prices into the grain future settlement process, a process that they contend will erode the pits and will hurt the customers and result in dramatically wider spreads for the customers. Interesting to see these floor traders still kind of clinging to life here. If you think of anything in this day and age is anachronistic and a dinosaur, even more so than a pit options trader, where at least there's some nuance to the mono price futures pit trader. That's got to be just one of the most anachronistic things in our modern trading landscape. It's interesting. I know there's a lot of but if you're one of these guys who is a lifelong pit guy and you haven't seen this writing on the wall and you haven't made some ancillary plans to trade electronically or do whatever it is to augment your business, and now you're forced to reduce yourself to a lawsuit to try to stop. I mean, you can call it progress, I suppose. You can call it a lot of other different things, perhaps, as well, depending on your point of view and your viewpoint on this lawsuit. But interestingly enough, that they did resort to this. Perhaps it's one tactic among many, and maybe there are other things in there, other weapons in their quiver. Hopefully that's the case. I hope this isn't just...
Well, I think too, in the lawsuit, I read that. I didn't even know you had that in the notes. I was going to talk a little bit about that. But I think in the article that they said too that they were going to do it to the lean hogs or the meat pits, and they got a reprieve. So I'm thinking that they're setting some type of precedence, whereas one commodity got a pass and they're not getting it. Obviously, overall volume for lean hogs and meats versus the grains is probably a fairly large contrast.
Yeah, I can't imagine lean hogs is a darling over at the CME they have to protect right now.
Yeah, I think more than they can get a reprieve, they must have said forget about it.
Who cares?
We're not going to make any money either way. But I mean, I started as a runner in the grain floor, so I kind of have a little bit in my heart for it. But I can only imagine, I think that one trader, his third generation, probably grew up down there in the summers as well, and so has a little bit more invested in it than just his daily income. Probably just coming of age, where it's just something that's going to be gone here. But I thought they were also referring to the options trading. I didn't really even realize there was still some futures trading going on in the pits down the floor. I figured they were just referring to the options traders.
Yeah,
where the majority of the volume is still on the floor.
Yeah, at least in the article I saw about this in Cranes, our friends over at Cranes, they pretty much were exclusive to the futures. And I read some of the press release of this group. There's a group out there too. I have that put this suit out. I forgot their name here, but they're called, I think, Protect Chicago's. Here it is. They put a press release. Who let the rats in our granary? And it's from Protect Agricultural Futures Markets. It's a group I think primarily made up of these floor traders in the grain pits and looking to. And of course, they make a couple interesting points, which is some of the some of the buzzwords of the markets these days, saying that the HFT guys are going to come in if you make it all electronic and use these electronic prices in the settlement, and it'll open the door to HFTs and manipulation and all the other things we've heard in other marketplaces. And there is some truth to that, I suppose. It will be interesting to see the high freak guys get their chance to dive into grains in a more aggressive way. But still, it is I have mixed feelings about lawsuits like these when I see them posted up there. Interesting stuff. Andrew, as a man who's traded in every pit product known to man except perhaps the grain futures, how does this strike you?
Floor members sue their exchanges all the time for whatever reason, and then they end up coming to some sort of compromise. The difference was in the old days, you were still a member-run organization, so we had some, there was some pull because the committees still kind of ran a good part of the exchange. Now I could see the point. It depends, how these products actually close, and ultimately this is all just going to get squeezed out electronically. It just is a matter of time, and these are the fits and starts. Do I miss the trading floors? Absolutely. Do I think they're all, it's going to all be electronic at some point? I think there will always be some sort of physical presence, probably for the next I'm not going to say always, but at least for the next 4 or 5 years until they get the request for quote methodology really worked out. Because ultimately, the only reason floors are down there is because the big firms want to cross orders. So, they want to cross orders easily. On an electronic marketplace, it's hard. On a trading floor, it's relatively easy. So that's kind of the deal. And I think that they're just kind of in a tough spot. I feel sorry for all the old floor traders. They got to deal with all this, but that's
the writing has been on the
floor trading.
The writing has been on the wall for some time. I think everyone here on this panel has been a floor trader at one point in their lives or another. So we've all seen this process from the business end. So yeah, we certainly we commiserate with them, but also there is definitely perhaps well, let's just leave it at that. We commiserate with them.
we do.
All right, and that is going to do it for the trading block, and now we're going to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that funky tune means it's time once again for the old odd block, the portion of the show where we dive into some of the interesting and perhaps dubious options activity that's lighting up the old tape. We're going to kick things off on the interesting side with the Materials Select Spider, ticker symbol XLB. This is the name that closed today at about $35.80. This name typically puts up about 36,000 contracts a day. Today they did well over 250,000. So it was a very, very active day for XLB, and pretty much all of that volume, 246,000 of it, came in the unwinding of one massive put spread. We saw someone come in and just light up the tape on the SEP 29 puts, selling out 123,283 of them, including a massive block of 93,000 for about 25 cents. We also saw the same number, I think one less, 123,282, going up of the SEP 25 puts being bought for around 11 cents. Both strikes have about 133,000 in open interest on them. So this was obviously a spread that was purchased quite a while ago, and has been taken off today. And given the recent volatility we've seen in XLB, this thing has gapped over the past few weeks from as high as 35, and of course in recent months it got as high as up as 37. Or about 37 or so back in April, and now closing today at 35.11. This guy may be thinking that he's gotten all he can get out of this spread, or as Andrew says so euphemistically, taken to the woodshed. Hasn't exactly been a huge winner for this guy. Taking his lickings and going home here in XLB. So that's a pretty sizable bet. I haven't had a chance to dig through, or at least our analysts didn't have a chance to dig through the when this open interest was established, so we can see exactly what he put this trade on for. But interesting stuff.
A lot of selling. Looks like there was bulk selling here at a quarter for these things. So I don't know. It's hard to tell which direction. Selling 26, 27.
Yeah, it was a bit of a mix there in terms of where it was going up mid-market. It'd be interesting to see when he put this on. I haven't had a chance to go dig through the open interest and see exactly when he opened this position, because that would give us a little bit more of perhaps a better indicator of what he was looking to do and when he put it on. But still, interesting stuff, and this is just a massive, massive unwinding here. Maybe it's just J.P. Morgan, part of their hedge.
Yeah, I don't know. It almost looks like they're buying it back to close. Am I crazy? He didn't get taken to the woodshed. I don't know.
I could see where you're leaning with that, because it is so heavily mid-market and kind of out of sequence. And these types of trades are always fun. Yeah, they got the SEP 25s
for the 12s.
Yeah, so it's a mixed bag. It looks like they closed it out by selling, but it could. I wouldn't be surprised if they did actually flip it out the other way. Either way, it's a massive closing out of this put spread, and it's so mid-market, like I said, that it's one of these ones that's a little bit annoying to actually parse, which is why it would be nice to have a chance to go dig through the open interest, perhaps on a later show, and come back to this one and see exactly what they were up to. But for now, since we're moving along with the show, we're going to move on with the odd block and dive into McMoran Exploration Company, ticker symbol MMR. This is the name that closed today at $13.74, up about 8.5% today. They usually do about 12,000 contracts, and today they did over 60,000. What we saw today was essentially a size risk reversal going up in MMR. It looked like a bullish risk reversal. This was another one that kind of had some interesting execution bits to make it a little more difficult to parse what they were doing, but essentially we saw about 17, a total on the day of actually about 20,500 of the July 10 puts going up, including two big blocks earlier this morning of about nearly 10,000 and 5,000 respectively of these puts being blasted out for about 15 and 14 cents respectively in those two blocks. This is against open interest of about 6,000 contracts. This is primarily opening paper here. We also saw about 17,000 on the day of these July 15 calls being picked up. It seemed like the bulk of them were picked up for around 29 cents. This is another one where the open interest was about 1,100 as well. This is a name that has earnings on the 17th, so this appears to be a relatively sizable earnings play here in MMR. Andrew or John, you guys watch this one at all, or see this volume going up today?
No, I thought Andrew was going to get pissed off because it was another debit spread, but no, this is what, an exploration company? I mean, energy's been on the radar for us, but not this particular one. But I think this goes back to when we talked last week about Andrew finding a credit for this type of trade, and And I'm just curious to
Now,
see
are
how
you going back to your customers and saying, why the hell are you putting that on for debit when you can do it for credit and get the same damn thing? Are you going back to tell them that?
I go back to them and I take it one step further. They go, well, who has the time to teach me this stuff? And I go, Andrew at the option pit. And he goes, boom.
Just just call the lobster, sir. The lobster will handle all your needs.
The lobster will handle all your needs. Jack the juice up though in there a little bit.
Yeah, they did actually. Interesting stuff. And yeah, you're right. Not exactly the best of executions here, but an intriguing trade nonetheless. We like risk reversals here. We like some earnings play. This is a pretty sizable one.
Very squeezy though, like from $9 to $13.50 over the last, since mid-June.
Yeah, you're right. He's trying to tap out the last little bits of this one apparently, and looking for a gap up on this baby going into earnings. Given what's going on in oil, who knows if this is a perhaps, who knows? Perhaps this guy knows of a massive find to come, which is always fun to highlight these types of trades going into earnings.
This could be a little spec trade for the old option pit tomorrow. We'll take a look at this.
There you go.
See if we can craft something delta neutral out of it.
We live to serve. How this one could have been executed about 5 different ways better than it was. But still, the intent is clear on this one. Interesting one to watch. And with that, we're going to close out the old odd block and dive right into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Express block. This is, of course, a portion of the show where the boys from OX hold down the fort. And Mr. Grigas, what do you have in store for us today, sir?
Well, a couple of things. We're still talking about the moves that we saw on Friday. Talk about a slow week leading into to Friday's 200-plus move in the Dow. But the one that we were most talking about was the crude oil. Crude oil has been getting just pummeled here for the last month. It was in the 70 handle, and then it was up about $7.50 on Friday. So we were trying to think back to, what was that, 07, 08, when we had that move up to $147 and change. And we're trying to figure out if we ever saw a bigger move as a dollar move or percentage. And we're looking back, and we saw that the move that we had was the third largest for the crude oil contract, and also by percentage is the third largest. So $7 move, that's what was it, about 16%, I think, based on Friday's action. If we look in September of 08, crude oil up $16.37 on that date, which reflected to, I think, about a 15.6% move. And then what's kind of neat to see, and a lot of people probably don't realize this, is that the second biggest move was in March of 1998. And so long ago, what do you think the dollar move was? You realize you have to be around 15%, but what do you think the dollar move was in 08?
I'm trying to think of what I'm thinking, let's see, in 08. Oh, 08. I'm thinking earlier. 08.
No. 08 was the biggest move ever at $16.
Oh, okay, I see what you're saying. I'm guessing.
And the second biggest move occurred in 1998.
I'm gonna guess about.
Recall what crude oil was going for.
Yeah, I don't know what it was going for, but I'm gonna guess about $4, maybe $5.
$2.19.
I thought I was going low. Wow.
Yeah, closed at $16.51 that day.
This is why I don't trade crude.
It's really cool to look back and see that, geez, gas.
World we used to live in when we were pups and innocents, and $2 a gallon for gas seemed so exorbitant.
Oh yeah, when I was driving to high school, I remember gas was 86 cents, and I had to badger my friends for $1. And $2 or $3 would get you, half a tank. It was great.
Back in 1942.
So it was just interesting to look at some of those figures since we had that big move, but didn't really hold on to the entire rally. I think crude oil, we got about another half hour until it closes, but August front month is down $1.37 to 83.59. So it is pretty much holding on to the majority of those gains. The other thing that we have coming up, I was out golfing yesterday at a course in Lamont, and was playing with a former colleague and also a pretty active trader and customer of Options Express. And he had a pretty good question that I thought maybe some other people that listen to the show may have as well. You guys were asking me where I golfed, and no, I didn't hit Dub's Dread. I think that's about $1.60 or $1.70 these days. Went to Big Run, which is down the street a little bit. Big course, long course, a lot of elevation. I think they're par 5 is 610 yards with a couple tiers on the green. That really humbled me. But we were talking about technology and what's new and upcoming on the website. And tomorrow we do our website release training courses with the desk, so they're familiar with these new products that we're kind of putting out there this week and next week. And one of the cooler ones, we have about 3 to 4 major ones, and then a whole bunch of different smaller improvements. But I thought maybe I'd get Andrew and Mark's take on this new type of order that we've created. This was the idea came from one of our innovation teams, which we do here at Options Express every quarter. People submit ideas throughout the year. They get on the innovation team. They get to work about 20-25% of their day on this idea. They present it to the executive boards, and if they like it, it gets approved. And this one, I think, was from Q4 of last year. We call it a walk limit. Basically, it works on about 5 different spread types: diagonal, calendar, straddle, strangle, put spread, or call spread. And if you trade the SPX or any of the cash indexes or a more obscure security, you've probably come to the realization that, wow, these spreads are wide. I mean, the SPX at the money, you could have not the PMs, but the standard ones. You could have $1.50, $2 wide market, somewhere along those lines. So what we've created is something that some of our active clients are pretty much already doing, and I'm sure we all do here too. Is that what is the fair value? What's the theoretical value of that spread? What's the fair price to pay? You never want to overpay for anything. Or, if you want to sell it, you want to get as much as you can out of it. So what you can do here, say you had a 8 bid at 10 and you went in at 9, and what you can do is have the limit order work up in increments of a nickel until it finds a sweet spot and gets the order filled. Saves you all the trouble of cancel replacing it and modifying it and taking all the time and effort to do that. So we have a walk limit debit or credit, and what it does is that it moves it up automatically without any input from the trader, and we think it's a pretty innovative idea and one that might take off, and hopefully we'll see it here in Schwab in a few weeks as well. But what do you guys think of that type of order type? I know maybe as a trader you probably don't like it, but as from the opinion of a retail client, what are your thoughts?
I mean, anything that helps retail get some of these spreads off in a more intelligible manner, I'm all for. I mean, you're right. As a market maker, these kind of things, sometimes you're like, whoa, what is this thing? But as seeing the retail customers and just what a difficult time they have wrapping their heads around spread orders and entering them in the right way and getting executions on them, and anything that helps with that process, I think, is a big and a beneficial thing. I think. Andrew, you're the guy who holds these guys' hands all day long. What do you think?
Does it have like the lobster claw, stop out on it in case somebody, puts in the limit really bad? They don't want to keep getting walked down for nickel from $8 to $2.
Yeah, it's 8 bid at 10. They want to sell it at 14. I mean, no, that's a good question. We have a lot of things on the site that will, for lack of better words, not make you place a dumb trade, but we have a lot of people that also complain that we're too restrictive. But so there's really no sweet spot as far as letting people trade what they want.
Okay, if you're too restrictive for the most part,
Yeah.
Because I'm sorry, I've just seen too many. You'll never put it this way. OX will never be too restricted. I'll tell you what would be a great idea is I think the running stop. If you guys could come up with that order, that would get people closed in a intelligent way. I think that would be the best type of order.
Well, give me an example of what you're looking for, because we have trailing stops.
Huh?
We have trailing stops.
Well, let's say you buy a call, okay? You get filled for $2, okay? Now, immediately, what I would do is, to me, then I create in my head, I have a stop below the market. Let's say my limit would be, $1.70, and I just paid $2 for it. If it hits my $1.70 mentally, I'm like, I look to close. But if you're now running the other way, and you're like, okay, now it's trading 230. If we pull back to, let's say, 205, I'm out. But every time, we move up in 40-cent increments, I'm going to move my lower stop higher, right? Because that way,
Gotcha.
the customer can keep a runner going, but as soon as you have the pullback, it'll execute whatever that lower limit is to keep the profits in the trade. The thing we try to get people to do is, okay, you have a trade, you've done some good stuff, you're up money, and then the thing pulls back and you turn your winner into a loser. Okay?
Yeah.
I hate that. So one way to keep you from not doing that would be to create what I call a running stop, which is you pulls back to a limit, you're out. It's like what we did with our VIX trade today. I mean, even though the VIX kept going down, but I wanted to keep the gain at some point, and the only way I can think to do that is when the P&L, let's say, goes down to 75% of where it was, and then you just pull the trigger.
We do have an order that's similar to that. It's a trailing stop. Kind of sounds like your running stop. Where say you want that option at $2, it would trigger a trailing stop that's 30 cents below your fill price. So it's at 170, and then say the market goes up to 230, it moves that stop up to $2. So it's always 30% behind the highest trade price of that option.
Oh, okay. That's the same thing. That's a good. Yeah, that's good. That's a good feature then. Does anybody use it?
Oh, everyone uses it.
Okay,
yeah.
Good. All right, good.
The order type that I'm trying to come up with, and we've all had this one, is a CIC. It's a cancel if close. It's where you put a stop in that you say you definitely got to get out. You're going to take your loss. You're going to be responsible. You're going to stick to your rules. And then when the market gets down there, you just cancels it automatically because you want to wait it out and see what happens. I don't know. You guys ever hear that one?
Cancel if close.
Cancel if close.
Just tease yourself.
Yeah, I mean, don't you guys ever have a stop in and then the market comes down there and you're like, we'll just let this one ride a little bit further, or I'll move my stop down, or let's just see what happens tomorrow.
So the opposite of good risk management then is what you're saying. I like it. There we go.
Yeah.
Unleash that upon the masses. Let's see what happens. All right.
But so that we got that walking limit coming out. We have an idea hub. I'm not sure if Alex talked about that. That's kind of his baby, so I don't want to jump on that one. But we are, like I said, in the middle of site release. And you will see these new features come up. You'll also see a new quote detail page, a little bit more user-friendly, a lot more information out there. We actually started posting average option volume. A lot of the things that Mark talks about on the show, you're going to kind of see some of that information up there too. So you get a standard if it was a unusual volume or usually a high volume, and for that option series and stuff. So a lot of neat things coming out this month. So kind of keep your eyes peeled out for those.
All right, John, thank you for that, and that's going to do it for the Express Block. And now, since we're kind of running late on the show here, so we don't have time for the listening mail, we're going to dive really quick into Around the Block.
Around the Block.
And Andrew, sir, what are you seeing on your screens for the rest of the week aside from the gas coming out of the balloon here from a vol perspective?
Yeah, I just, I cautioned all to be careful on the short gamma with this next 4 days. It's just one of those things where it's kind of sneaky. Everybody's letting that front month die. So I'm not as excited about the volatility coming in more, although we probably have one more handle or so on the VIX, I think. But it's just right about that fair level where it's about trading about the underlying. I don't think it's going to come in too much unless we start going sideways for a couple weeks, which is, we haven't had that for a while, so it could always happen. So actually, I'm looking at all the social networking stocks. I'm looking at incredibly cheap volatility across all these Chinese social networking stocks or Chinese internet stocks. The whole lot of them are trading for nothing. So, I mean, that's where I'm kind of got my current focus. We're always looking at the VIX, but I think that's what we see for that volatility. So.
All right, thank you for that, sir. I know you have to run, so really quick, what's coming up for the week ahead here at the pit?
I guess the next thing is Mark is teaching a class with Russell Rhodes on the VIX, July 21st. It's an all-dayer on a Saturday. If you don't know anything about the VIX and want to understand why it's important to know how to trade, to understand, having that non-directional vol bias to trade these products, it'll take your game up a huge peg if you understand how these products work. And Mark is a great teacher at the VIX. He's been slapping that product around for a while. And Russell is a great teacher as well. So you're going to learn how the things trade. So July 21st, that's our next big biggie.
All right, thank you for that. And Mr. Seabass, I believe, having a birthday today. I think he's 74. So
he is 74 years old. He looks damn good for his age. How he married that 21-year-old wife at 74.
Yeah, those Mormons, they get away with a lot of crazy stuff. But
I know, they got that line. That's all I can say. It must work for them.
All right, thank you for that, Andrew. Go forth and prosper, sir, and have a good holiday.
Thank you very much.
You're welcome, sir. Mr. Grigas, what is coming up for you? What are you watching for the rest of the week here? Obviously, a slow holiday week, not exactly a lot of customer paper lighting up the old tape here. Not exactly a lot to look forward to from a earnings or from a number perspective, really, the rest of this week. We have some concerns about Euro still on the horizon, but for the most part, it seems like everyone's just sitting back and gently letting the air come out of the balloon. Is that pretty much what you're looking forward to the rest of the week?
Yeah, I mean, it's a hot, slow week in Chicago. I mean, if you're dealing with it too. I mean, 99 tomorrow, 96 on Wednesday. A lot of people off here in the industry and at work. The only thing I get worried about is, there could be something come out of Euro. We also have non-farm payroll on Friday, which, has moved the market the past few months. They're looking for 100,000 new jobs created. You get a bad number there, and, vol is so low, like Andrew had said earlier. We could see a big move when they have that light volume. And you have a lot of market makers turning off the switches, after Wednesday. Could be some really choppy trading if we get a bad number Friday.
That is true, and given what we've seen this week from a Chicago perspective, you're right, everyone's off, everyone's gone. In fact, speaking of which, we should let our listeners know that this will be our only show for this week, given the holiday week. It seemed like a good time, and the disruptive nature of a holiday in the middle of the week as opposed to the beginning or the end of the week. It falls kind of right close to our recording day on Thursday there, so we decided to, rather than have everyone scramble back from their holiday and try to record, this will be the only show for this week. So unfortunately, from around the block perspective, you only have one show to look forward to this week. But hopefully we'll come back with a lot more stuff next week, including a lot of your listener feedback. We've getting a lot of great questions, people posting in our forums. I know you're chomping at the bit for us to come and answer them, but we've just been too jam-packed with these shows of late, too many topics to discuss. Some great questions about iron condors versus flies and all sorts of fun stuff. How do you describe yourself as an options trader? We'll get to them, don't worry. It's all coming down the road. But for now, that's going to do it for this Around the Block segment. That's also going to do it for this episode of the Option Block. They couldn't make it here today, but of course I want to give a plug for the boys over at KYO. I know they're hopefully getting the final details sorted out on their broker-dealer. They'll have more news to announce on that front relatively soon. Of course, if you want to learn more about anything we talked about on the show today, the market share numbers, the exchange news, a lot of industry news we have going on these days, a lot of our options, market news, unusual activity, education, all that fun stuff, by all means, surf on over to the optionsinsider.com, or you can just find us on iTunes or Stitcher or any other places that fine podcasts are sold. But before we go, all of us here on the old Option Block All-Star panel want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program and making it such a success. And we hope all of you out there have a great 4th of July, and for the rest of you outside the U.S., and by all means, just have a great 4th of July and just celebrate in any way you feel fit, whatever it is you do in your country of choice. But that's going to do it for us for this week, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.